This is Matthew Cratter from Trader University, and today I want to answer the question, should you buy stocks, bonds, or Bitcoin? I'm also going to talk about a couple other asset classes, including other cryptocurrencies, real estate, and gold. So be sure to stay tuned for those as well. I should say from the outset, none of this is investment advice, and we're not talking about trading here. We're talking about a buy and hold allocation. This is the problem or the question of long-term asset allocation. If you're going to stick your money, park it somewhere, perhaps in a retirement account for 10 or 20 years, where do you want to be? So that's the question I'll be answering. Now, the very obvious thing is you don't want to be in cash and bonds over the long term. Obviously, you should always have a little bit of spending money, whatever it is, 3 months, 6 months in cash to spend. You don't want to have everything in stocks, for example, because you might get a stock market crash and then you'd have to sell stocks at a loss just to pay your monthly bills. But as a long-term portfolio allocation, cash and bonds just don't make sense for the really obvious reason of where interest rates are. If you look at some of the highest yielding savings accounts, I just went to Bankrate here. We have Lending Club, Marcus, Sallie Mae, and the highest you can really get is about a half a percentage point, 50 basis points or 60 basis points. Likewise, if you were to buy government bonds like U.S. Treasuries, we have here the different maturities all the way going from T-bills of 1 month to 30-year bonds. And the rates really go from close to zero and they peak out around 2% for 30-year bonds. So on the one hand, we have savings account at 0.5%. We have treasuries maximum level and where you're taking a lot of interest rate risk at 2%. And yet the CPI for the last couple of quarters has been clocking in at above 5%. So anyone can do the math. If you're earning 0.5% or even up to 2% and your money's depreciating by 5% a year, again, consumer price index probably really understates inflation. It's probably much worse than this. And if you've been following your grocery bills or your rent increases, you know that it's much worse than this. But even if we take the government at its word and say inflation is at 5%, you are still slowly losing purchasing power and destroying your net worth if you're sitting in cash and bonds for the long term. So we cross them off the list for obvious reasons, just simply because they can't really appreciate that much. And the rates that they pay, the yields they pay right now are way below the rate of inflation. Now, if you're finding this video helpful so far, please hit that subscribe and like button. Maybe share this video with a few friends as well. It has turned out over the last, really since the great financial crisis, so since the market bottom in 2009, the best place to be to preserve your wealth as a store of value, or one of the most common places to be, has been the stock market. This is the S&P 500. This is the triple Qs, the NASDAQ 100. And obviously, these have both been dominated by FANG stocks and by big tech. But they've been a good place to hide from the central bankers, to hide from low interest rates, and to preserve your purchasing power in the face of all this money printing. But now we're going to do something. We're going to deflate these or denominate these indices in Bitcoin, just as an exercise. So on this chart, if the S&P 500 is outperforming Bitcoin, the line will go up. If the S&P 500 is underperforming Bitcoin, and in other words, Bitcoin is outperforming the S&P, the chart will go down. And we can see really since 2019, it has been a volatile chart down. We can scroll out and just see how bad it gets. Bitcoin has obviously been a much better place to be than in one of these stock index funds, whether it's the S&P 500 or a more tech concentrated version. Even the QQQs, which have just had tremendous performance, have massively underperformed Bitcoin, as we can see, especially over the last decade. So we conclude that Bitcoin has been a better allocation. Again, forward-looking, past performance is no guarantee of future performance. That being said, if we understand the reasons that Bitcoin has outperformed, stocks are a form of scarcity. There's only so many Tesla shares, for example. The company can issue more shares, they can dilute shareholders, etc. But there's a certain scarcity involved. And you can think of it in terms of, let's say you owned all of Amazon or you owned all of Tesla. You own a very unique asset. And the fractional ownership can be changed. But these are still scarce assets. You can't create your own Amazon. You can't create your own Tesla and really compete with them. In the same way, you can't compete your own Bitcoin and compete with Bitcoin itself. So we conclude that cash, bonds, S&P 500, tech stocks, these have all massively underperformed Bitcoin over the past decade. So then the question becomes, what about real estate? This is another scarce asset. There's only so much land. There's only so many desirable places to live in the world. The median priced house in the U.S. has been a very, very good way to preserve purchasing power, as well as putting a roof above your head. Back in 1971, when the U.S. left the gold standard, the median price of a house was about $25,000. As of the last quarter reported, it's now at about $375,000. So this chart has been straight up as well. But when we deflate it or denominate it in Bitcoin, we can see that housing prices have been crashing in terms of Bitcoin purchasing power over the past 5 or 6 years. What this means is if you've held Bitcoin instead of a house or investment property, you've been outperforming. And in fact, as you hold Bitcoin, all houses begin to look cheaper and cheaper as Bitcoin goes up. If you want to investigate this a little more deeply, I have a video here about how Bitcoin is going to affect the luxury real estate market. Basically, luxury real estate worldwide is used as a store of value by very wealthy people, and Bitcoin is a much better form of store of value than luxury real estate. You don't have to pay property taxes. It's much easier to move the money around. If you're a wealthy Russian investor investing in Manhattan and all of a sudden the U.S. gets mad at Russia, it's very difficult to pick up your building and take it back to Russia. Whereas if you're storing your value in Bitcoin, it's much easier to move around. Finally, we'll look at gold. It goes without saying that gold has massively underperformed Bitcoin. Bitcoin really is gold 2.0. And what we've seen here is something very similar to Netflix versus Blockbuster, or Amazon versus Borders, or Barnes & Noble, where the newer technology just continues to grow and grow and grow and take market share. So Bitcoin has a lot in common with gold, but it's like gold, but much better. It's easier to send, easier to verify or assay, easier to store, and it's much scarcer than gold. It's provably scarce, unlike gold, of which there's actually quite a bit on the Earth and in the solar system. Poor Peter Schiff continues to cling to gold. He's been pushing gold. He's obviously a used gold salesman, but he's liked gold over Bitcoin since Bitcoin was at $1, $10,000. And when Bitcoin eventually gets to $1 million in the coming years, we can imagine that he'll still not have changed his mind. The great irony, of course, of this meme is that gold is at 1,700, and if you Google the price of gold, it seems like gold is always at 1,700. I don't know why it's being pinned here, but it is. It's a pretty good joke that or meme that's manifesting itself in reality. Then the question remains: maybe you should be in a different cryptocurrency besides Bitcoin. And this would work if you have a crystal ball. But if we go back and look at CoinMarketCap, we look at the top market cap crypto names back from 2013, this snapshot, you will not recognize anything on here unless you've been around crypto for really since 2013. So we have Feathercoin, we have Mincoin, we have BBQ Coin, and at the top, of course, we have Bitcoin. Bitcoin is always at the top. The Ethereum folks who talk about the flippening really don't know what they're talking about. But the only name on here that I really recognize that's still around is Litecoin. Everything else, Namecoin, Peercoin, NovaCoin, TerraCoin, these are all lookalikes. These are all fool's gold, you might say. And this is one reason. There's the Lindy Effect, which means the longer something's been around, the more likely it's going to be around. Bitcoin really wins the Lindy Effect, and it has this first mover advantage. It has the strongest brand among the cryptocurrencies. It is sort of the gold standard. You always have on my channel, you'll always see like XRP or Ethereum people saying, of course I own Bitcoin as well. But you very rarely see Bitcoiners say, I also own XRP as well. Because once you figure out money, once you figure out what makes Bitcoin so special, it's decentralization, it's immaculate conception, it's verifiably small supply, you realize why Bitcoin is going to win this battle for store of value and for global reserve assets. So before you If you think you can outtrade Bitcoin, you can be in Solana or Cardano or one of these other coins. Over the cycle, over the bear and bull markets, it's highly, highly unlikely that you will outperform Bitcoin. Certainly buying and holding, it's very unlikely you'll outperform Bitcoin. And what's more likely is you will end up having your long-term investment in something like Purecoin or Feathercoin, which disappears, and you'll never hear from it again. So this is how I think about it. This is sort of a top-down version of long-term asset allocation, and there really is nothing else like Bitcoin. If we're going to extrapolate past performance, Bitcoin is a no-brainer. But it's also important to understand how Bitcoin works. You can watch all my other videos about Bitcoin. I have certain fundamental ideas about it, and these suggest that Bitcoin will continue to take market share and will continue to be the best performing asset in the world over the coming decade, just as it has been over the past decade. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.